Everyone has an opinion on credit cards in college. I've had a credit card for a while now, and today I'm going to give you the most honest breakdown I can. What the benefits actually are as a college student, what the dangers are, which cards are worth it, and most importantly, if it's right for you. So let's get into it. Before anything else, let's make sure we're on the same page about what a credit card actually is because I think a lot of people use them without fully understanding the mechanics and its full potential. So a credit card is basically a short-term loan. So every time you swipe it, you're borrowing money from the card issuer, whether it's MasterCard, Visa, whoever it is, with the agreement that you'll pay them back in the future. If you pay it back in full every single month before the due date, you pay zero interest. So the card and the loan cost you nothing. But if you don't pay it back in full and carry a balance, that's when the card issuer starts charging you interest. And credit card interest rates are brutal. They're worse than most student loans. So I'd say we're talking about 20%, 25%, sometimes 30% APR. That means if you put $1,000 on a credit card and only make minimum payments, you could end up paying $1,300, $1,400 extra, depending on how long it takes you to pay off that full amount. Now that's the fundamental thing that you need to understand before you even apply for a card. Credit card is only free money if you treat it as a debit card. And the second you treat it like extra money that you don't have, it becomes one of the most expensive financial products available to you. Now here are the benefits because they are real and they are significant. Benefit one is building credit history. So your credit score is one of the most important numbers in your financial life, and most college students have zero credit history. This number matters when you go to rent an apartment, get a car loan, or eventually when you get a mortgage. Landlords pull credit, lenders pull credit, and even employers pull credit for some certain positions. So opening a credit card, using it responsibly, and paying it off every single month is the single fastest way to build credit history. A year of responsible use of your credit card can build up your credit score before you graduate. Benefit two is rewards and cash back. So a lot of credit cards give you something back every time you use them, whether it's cash back, travel points, or statement credits. And you're spending money anyway on your credit card for groceries, gas, subscriptions. So if you're going to spend it, you might as well earn something from it. The key thing here is that rewards only make sense if you're paying your balance in full. If you're carrying a balance and paying 25% interest just to earn 2% cash back, that just doesn't make sense. Benefit three is fraud protection. Credit cards have significantly stronger consumer protections than debit cards. If someone steals your debit card information and drains your bank account, getting that money back is a process. Now, if someone steals your credit card information, you report it, the charge gets reversed, and your actual money never leaves your account. So, for everyday purchases and especially for online shopping, credit cards are genuinely safer. Now, here are the dangers. Danger one is carrying a balance and paying interest. So, this is how credit card companies actually make their money. Those rewards I was talking about earlier, they're not just doing that to be nice. They're banking that a percentage of their clients will carry a balance and have to pay interest. So you don't want to be that percentage. You want to pay off your balance every single month and don't overspend your card. Danger two is overspending because it doesn't feel like real money. This point is real and it's psychological. Research shows that people spend more when they pay with a card than they pay with cash. This is because swiping or tapping your card doesn't feel like spending. The physical disconnect between the card and the money makes it easy to lose track of what you're actually spending. The trick is to treat your credit card exactly like a debit card. Before you swipe, ask yourself if that money's actually in your bank account, and if it's not, you don't swipe. Danger three is missing payments and tanking your credit score. A single missed payment can drop your credit score 50 to 100 points, and it stays on your credit report for 7 years. Missing a payment because you forgot, because you're busy, or because you had more time doesn't matter. The damage is the exact same for all those situations. The fix is simple. If you can, set up autopay for at least a minimum payment the day you get your card. You never want to miss a payment. So which cards actually make sense if you're in college? For most college students who are just starting out, a student credit card or secured credit card is the right move. These cards are specifically designed for people with no credit history, and they have lower credit units, simpler rewards, and they're easier to get approved for. Popular options you see recommended are the Discover It Student Cashback, the Chase Freedom Student Credit Card, and the Capital One Saver One student card. All of these have no annual fee, decent cashback rates, and are designed specifically for people building credit from zero. And then once you have a year or two of credit history and a solid credit score, you can start looking at upgrades. I know that there's cards out there that offer you serious travel rewards, airport lounge access, hotel credits, statement credits. But you have to earn your way to get up there. You don't start there. That's something several years from now. So the real question, are you, a college student, ready for a credit card? My honest answer is it really just depends on you. It doesn't depend on your age, your income, your GPA. You're ready if you have a consistent income, even if it's just a part-time job, and you track what you spend and you know where your money goes. As long as you can commit to paying the full balance every month without an exception, and you understand that a credit card is a tool, not a safety net, is when you are ready. You're definitely not ready if you already struggle to stay within a budget and you tend to spend impulsively or emotionally. If you don't have a stable income to pay the bill every month, or if you're planning to use it for things you can't actually afford right now, then it's not for you. There's zero shame in not being ready as a credit card for a college student, because a credit card in the wrong hands is one of the fastest ways to start your adult life in a hole. But a credit card in the right hands to build credit, and if you use it like a debit card, pay it off every month, is a great financial tool available for you right now. The goal is not to have a credit card, it's to build a credit score that opens you up for a mortgage in the future, apartments, car loans, while earning something back on money you are already going to spend. So if this video helped you, make sure to subscribe for weekly college and student finance content every single week. I post every Wednesday and Sunday, and 90% of my viewers aren't subscribed, so make sure you all click that subscribe button down below, and thank you for watching.